Hello, everybody. Welcome back to Beer and Money. My name is Ryan Burklo. On today's episode, we're going to be talking about why it feels like financial planning is a moving target. And I think it's really easy to understand this. The fact is our equity compensation, right, is changing every year, right? Our kids, they're getting older. We got to plan for their sports. We got to plan for their daycare. We got to plan for their college. Our parents, right, as they're getting older, we have to make sure that they're being taken care of and our health and their health. Volatility, either in the market or even tax laws, sunsetting or new tax laws coming in place. Preparing for a job layoff, possibly, or just the different cycles of that comes with working in tech. This is hard to really financially plan for unless you have certain things in place. Now, what stops people from doing this? What stops people from doing this is really the psychological trap. At least I've experienced this, where oftentimes when a client is sitting down with me, I'll ask them why they're sitting down with me, and their questions are around like their overall question is, where should I be putting my money? Because I'm really kind of sick of working my tail off, and I don't know that I'll ever stop. That stresses me out, right? But they're not even having a conversation with me up until that point because they keep thinking, well, once I hit X amount of dollars in income, or once I hit X amount of dollars in net worth, then I'll start to feel secure, or then I'll start talking to a financial planner. Or once my stock vests at a certain dollar point, then I'll start talking to a financial planner. Or once I'm ready to retire in my business, then I'll start talking to a financial planner. Once my kids are older, then I'll start, right? It's always this once I blah, 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 then I'll do X. And I get why they do it. I've done it in different areas of my business, right? Where you just can't take a second to look at that financial plan or that business plan because you've got so many things going on. So what do you do about it? How do you change this? Well, what I've experienced, at least with me personally and with my clients, is you have to understand what it is that you want. Oftentimes when we're sitting down with people, we'll ask them that question and they're not really sure because they've never taken the time to sit down and really look at what they want. And when they figure it out, that's actually when they engage with us, which is really interesting. So what is it you want? What is it that you want to optimize, right? What do you want to keep doing? What responsibilities do you actually like? What responsibilities do you not like? How would it feel knowing where you're at and where you can be in a certain timeline, 3, 5, 10-year period of time? Does that give you the confidence and maybe even gives you a little bit more, less stress because you know exactly how this is going to play out as long as you follow the financial plan? So let's look at a couple different things here. I'm going to share my screen. And a big piece with financial planning is understanding how your finances come into play and the bigger picture of how does it work for you. So I'm sharing my screen here. We're looking at a client that's roughly making $350,000 a year. They're saving a good amount of money of $62,000. So they think they're doing well, but they're still questioning, like, Ryan, I've got these RSUs vesting and I'm paying a lot in taxes. Ryan, how much should I go Roth or traditional? Ryan, like, they're asking these tactical questions or siloed questions. So I take a step back and I'm like, okay, let's look 10 years from now. What do you want your life to look like? What do you want to be doing? Right. And if you're looking at this person in 10 years, retirement maybe not be on their mind or even in capability, given their current income and assets. But what do they want their balance sheet to look like so that they'll stop being stressed out about it? And then as we figure that part out, what that life looks like, where they want to spend their time, what responsibilities they want to have, then we can start to build a cash flow plan into that. Too often my industry tends to focus on rates of return, and that's all they focus on. And don't get me wrong, a rate of return is a part of the conversation, but the fact of the matter is we can't control it. No advisor can. If they do say that they can control it, you should run, right? Markets go up and down. Every person that I work with that's in retirement, We set them up so that if the market's going down, hopefully it's not breaking their financial picture or breaking the income that they're kicking off from their assets. The same thing is really kind of true when we're working. If we have income coming in the door and we have a plan in place where, imagine you've got enough access to money so that if you were laid off or you just wanted to take a sabbatical, you're going to be fine. And that money is not tied in the market. So if you get laid off, because let's just face it, if you get laid off, oftentimes the market's not doing well. It kind of goes hand in hand oftentimes. So that's not a great time to touch your investments or those stock options if it's down. So you need to have a financial plan that has liquidity, access to money that doesn't have any effect on what the market's doing. Have investment options and opportunities set up on your balance sheet. So when we look at any kind of financial plan, the money coming in the door from the income, where should it be going to build the life that you're predicting or wanting in this 10-year period of time? That's really the planning piece. And then we get to sit down and decide, once we know how much money we want access to, how much money we want to invest, how much money we want in retirement accounts. How do we pay down debts if we have any debts? How do we mitigate the taxes? All of that is in the financial planning piece. And making sure that if this income stops coming in the door, you're still going to be fine. Your lifestyle doesn't get turned upside down. That's financial planning. The financial plan will change over time, but imagine having a plan that is movable and it doesn't completely derail everything you're doing. I just had a conversation with a younger couple and they were asking me questions like, "But Ryan, I've got stock options here, I've got taxes over here." Like they had all these different pieces. We just don't want to make the wrong decision, or we just don't know how it all comes together. Imagine having an understanding of how it comes together. What type of security would that bring you? That's what financial planning does. Now, obviously, I'm biased. I think people should work with us. But if you just have your own financial plan and you have an understanding of how this works, my experience is the stress starts to go away, especially when you're not reliant upon the market. Like if you're reliant upon the market to only satisfy your lifestyle, you might run into some troubles, right? If the market's down 20% and you're reliant upon that, because maybe that's your stock options that you cash out every year, does that freak you out? So, some action steps to consider when we're looking at the financial planning piece and we're looking at these pieces around takeaways so that that goalpost doesn't keep moving. Number one, make sure you have some sort of vision 10 years out that isn't tied to the market. Build a cash flow plan that can absorb volatility. Know what it is you want. What responsibilities do you want to have? And then revisit this vision and this plan quarterly, at least. Because what I've come to understand is, as you are looking at your finances and understanding your vision, that may change over time. But when you're looking at it at least quarterly, you can make adjustments that are more proactive than reactive. So I wanted to share this with you because the more I work with clients, this is really the big takeaway, is that peace of mind. And I know that's, oh man, that is so stereotypical for someone in my industry to say. And I think so many people they've heard that line, but all they experience is someone talking about their investments. If you're working with a financial planner and you're wanting that type of peace of mind, you should be working with someone that's looking at the entire holistic picture and build a plan that's personalized to you. So with that in mind, I know it's the end of the year here. In our show notes, there is a financial scorecard that you can go to. Click on that link. My team and I, do not get any access to the information you put in unless you click the button to give us access. But it'll print out a financial scorecard. It'll ask you a good several questions around your finances. It gives you a scorecard at the end. That will give you at least a kind of lay of the land, a 30,000 foot view look of your finances and how you look right now. And if you wanted to take that step further and have my team and I have a brief conversation with you to see if maybe we're a good fit, that's a great place to go. Second part, what specific questions do you have? For those of you listeners, head over to beerandmoney.net. At the top of the page, there's a contact us. Click on that and send us any questions that you have, and we will maybe answer those questions on the podcast. We hope this episode is valuable for you. And as always, cheers.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities LLC, OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806.
8655703.1, expiration date December 2027.